Hello again. Right, this morning's trade was a pound yen short. As you can see, I got a 30-minute alert at quite early in the morning. I think it was 04. Yeah, it was 04. So 2 in the morning, 4 o'clock on the charts. I actually woke up early this morning. Tend to do that at the moment. 4 a.m. I don't know what's going on, but I was awake around this stage here. I didn't bother to even wait for pullbacks and continuations, although there was a 5 minute alert to the downside here after the 30-minute pullback. I did actually just hit it as a result of seeing that there, which was probably, in fact, yeah, 4 a.m. So literally, I'd got up about 4 a.m. as I say, just seen this, probably just wiping the sleep from my eyes, as it were. Sorry about that, a bit descriptive, and saw that and hit it. Now, as you can see, the reason I've talked about this in the past, give a sort of a sensible stop on these 20-25 pips is because of the volatility of this currency pair. If, for example, I'd been trading Aussie dollar or Euro US dollar, um, I wouldn't have expected this volatility, but you have to leave an element of room because that you will just get taken out by the accumulation and distribution of the price as it moves around. Um, I truly believe that this is a good time, the best time of the day to trade if you're just like me, a steady eddy, small trend trader, trend trader, purely because you've got to remember what moves the market. It's the big players move the market in the big hours or the volatile hours. That's the institutions, the massive hedge funds, Bank of England, Bank of Japan, the American Federal Bank, and so on and so forth. And the ECB, the European stuff. That's when the market moves. So when we're trading at this time of day, prior to 7 a.m., the hours running up to say 7 a.m., the Japanese and the Asian markets are winding down. The British markets are out. The Frankfurt European markets are not active. The American markets are safely tucked up in bed or getting to that point on the west coast. So at the end of the day, this is, in my opinion, the time to trade because you're not going to get caught out like massive moves like this. There's no way to trade a trend trading method, especially on the lower time frames, at 8 a.m. in the morning or 9 a.m. in the morning because you just get these massive moves caused by news, institutions. We've got Draghi, the European guy, speaking at the moment, which is causing the fluctuations in the market. So that's why I trade that time of day. That's why I limit my targets to relatively small at this time of day, as you can see, purely because you have to be aware you're going to get caught in whipsaw, and that's painful, and there's no need for it, especially if you're trading slightly larger amounts per lot, as I do, because it's just dangerous. It's not necessary. It's absolutely not necessary. Trade the quieter time. Other people will tell you not to trade it because they're trying to get 50, 60, 100 pips. All I'm after, and that is why I'm just after my 10, 15 pips or whatever. This morning's trade was 14 pips net of spread. And there was another trade last night as well, and I'll explain that one. Having said I try and trade just once a day, if after a massive move like this I see a reversal um, at a strong level, which obviously at this point this was proving to be a strong level after a move of 25, 50, 100, 150, 125, sorry, 150. So 150 pip move. If we get an alert to the upside, in this case at this point here, then I will definitely have a go, because you can put your stop there. So you're talking about a 15 pip stop, um, and a potential of a good 20-25 pips to the long side. So let's drag and drop that trade onto the chart there, and there it is there. So apologies for that. Take the spread off, take the what's it off there, scroll, and as you can see, entered as a result of the M30 conf to the, or the alert to the long side, then the 5 minute alert to the long side as well after this pullback here. It really was just a no-brainer. It was based on reward risk, this one. The stop was just below there, and as you can see, the take profit is just before that big round number of 12500. So two little trades there, always using the same methodology, which is the 30-minute or hourly alert, depending on which one looks best. Support and resistance, trend analysis. Here's the trend again: low, high, higher, low, higher, high. We're actually sort of broken this sort of area here. We can clearly see that it's not the best looking resistance level. The break of this level would have been the perfect trade, as it were, because you're using pure strong resistance here as support. But if you put the line chart on there, you can clearly see there is something going on there, and once we've broken through it, you can see the price blasted up from that level, really. And then if we put a level on here, you'll see how it's best to go for that slightly lower one. You'll see how the price, you'll probably find a load of spikes on the candles there. Not quite touched it, but you can see. So the line chart is a useful tool for doing your trend analysis. Low, high, higher, low. So you've got swing 1, swing 2, swing 3. I always enter after swing 4, which, as you can see, happened there. Swing 4, swing 1, swing 2. Let's just draw that on for you. Swing 1, swing 2, swing 3. Swing 3 has to break the high, the previous high, which is swing 1. So you discount that one really because it didn't break it. Swing 3, swing 4, come back to test the little high there of swing 1. Doesn't always do that, but you can see that's sort of clearly what happened. Swing 1, 2, 3. Here's 4, come back down. Sorry, I realised I'd already put that little line there, but swing 4 to come back down. Decent retracement. The retracement obviously is qualified, if you like, by that alert there, where the 3 MA has crossed over the 10 MA, and then the continuation. So late in the day trades, these are the standard times. Once again, this would be the lull in the day, because we're looking at what time was that? 9 o'clock in the evening. The Americans have wound down their daily trading. The Brits are getting ready for bed, having a glass of wine. The Asians are still tucked up in bed at that time, and the Europeans are having their glass of wine. They've probably got their bed socks on and tucked up with their pyjamas at that stage. So again, that's the same mindset. Trade a trend during the quieter times of the market. Okay, hopefully that helps a little bit, and have a good day.